Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. Things in the currency space has been on the quieter side, with the majors broadly consolidating on the stronger side against the dollar, and so have the Asian currencies. The recession fears continues to push oil prices lower. One important question for oil, though, is when will US step in to refill its SPR or strategic petroleum reserves, which it released when gasoline prices across the country were under a lot of pressure. Biden famously said that it would be when WTI hit $75 a barrel. But right now there are no signs that they have stepped in. JK, good morning. Going forward, what do you think will guide asset prices with the next FOMC just 5 days away? What are you expecting out of the markets?
Good morning, Swaraj. Actually, for people who are looking for volatility and make money, I don't have such a great news because as we enter the third last week of the calendar year, I'm seeing activity levels dropping already, and market moves are more driven by position adjustments and minimal flows. Even a significant data change in CPI next week or Fed statement could evoke either a muted reaction or an extremely exaggerated reaction, maybe untradeable, which the players would like to avoid exposing themselves. Therefore, I think a lot of players are, already having faced a very volatile year with news-driven, policy-driven, geopolitical-driven. I think players would like to get into an early Christmas break rather than, exposing themselves to the risks. That said, we have to also look at what's been happening, at least on a day-to-day basis. So the data slate yesterday from US and Europe was very less. In fact, Europe had nothing to offer, but US weekly jobless claims came slightly higher, but not much reaction from the market. And the Fed's weekly economic index saw annualized growth slipping to 1.18% from 1.64%, mainly due to fall in retail sales, consumer confidence, and railroad traffic. From Asia, we had Japanese GDP that came slightly better than expected, while Australian trade data showed exports continued to struggle with the Chinese demand affected. Today, interest is surrounding the PPI inflation and the Michigan preliminary survey from the US. PPI is expected to have remained on a month-on-month basis at the same level, while year-on-year could see 5.9% versus 6.7% in core and 7.2% versus 8% in headline. Softer than expected readings can relax market expectations for a higher terminal Fed rate when they meet next week. Market is seeing a drop in inflation expectations in Michigan survey. In Asia, we will have Chinese inflation. In fact, it's already been announced, and it's more or less in line with the expectations. And as far as the stocks and yields are concerned, they reacted positively after weekly jobless claims data on perception that employment situation is getting worse, and hence Fed would be moving towards a less hawkish approach. Wall Street rose on enthusiasm over a rally in US listed shares of Chinese companies because of the expectation of openings of the economy and activity level picking up, as well as Chinese exports increasing. While copper climbed on hopes of increased demand from China as well. Bond yields were higher, mainly on account of profit taking from big buyers who went long after last month's CPI report. But the overall moves in equities and bonds were nothing significant to write home about. Brent crude prices slipped further to 76.5, a level seen before the Ukraine war. Additional bearish pressure coming from expectations of a key Canada-US pipeline, which will return to service after a break, and increasing supply of oil weighed on the market at a time when economic slowdowns around the world have reduced energy demand. As far as the FX world was concerned, dollar was broadly weaker with dollar index up, and euro in fact leading the pack once again, even as many ECB members have been once again remaining hawkish. Australian dollar and Canadian dollar improved as the commodity demand from China is expected to improve as well. GBP and yen, of course, just piggybacked on the euro moves, and euro is definitely the leading currency in this move. CNY has settled well below 7 now, and expectations of another large support package for real estate sector by Chinese government has added to its firmness and overall sentiment. The strong rise in copper and iron ore prices actually depicts market expectations of improved Chinese demand and augurs well for overall economy. expect definitely the markets to quieten down in the coming days, but that's definitely also evident in the USD INR moves in the session yesterday, when we saw a move of less than 15 paisa overall, 15 to 20 paisa overall. And obviously, we had very big move last few days, and that has been consolidating after DXY is seen further weakening and Chinese yuan seems further strengthening. But as long as players have in mind large deficits of the country and also the lack of flows, the sentiment remains somewhat subdued. Only in the absence of RBI presence from selling side, it's very difficult to see rupee remaining strong. But that is definitely expected, because I don't think RBI would like to see the rupee weaken more, given their hawkishness in the policy recently as well. Expect a narrow range between 82 and 82.5 in the run up to the US CPI and Fed rate decision. Thank you all. Have a good day.
Thank you, JK. And just to summarize, we are seeing somewhat calm markets because drop in activity levels. And as markets try to celebrate an early Christmas, given how volatile 2022 has been, US weekly jobless claims were slightly higher. Japanese GDP was better than expected. And today, of course, we have the PPI data from the US. Chinese inflation was in lines with expectations, and Brent is at pre-Ukraine war level. While rupee trades in a narrow range of 15 to 20 paisa yesterday. Basically, data from US is creating a narrative that Fed terminal rates will be lower or at the current levels, and any change in such expectations will drive the market forward. And as my colleague Shikhar has said it before, do catch us at the 9th edition of the Almus Rupee Money Conference tomorrow. We have got some fantastic speakers and really good content. We have attached the website link in the description of this video so that you can register. If you still have some queries, feel free to reach out to us through our website or LinkedIn, and my team will be happy to assist you. That's it from us today. Thank you so much for listening. Have a very good weekend.